Welcome to Drill Down Earnings. We have quarterly results out from Coherent, one of the 50 most important companies in technology, and a company that I own. So please accept this as bias. I don't want to be biased in my reporting about this company, but I want you to know where I sit with this. I do think this is a really important company, and the business story behind this one stock on a move. And yes, the stock is moving. And if you think this is investment advice, it is not, because I'm losing a lot of money right now. The stock is going down. Let's talk about what really happened with Coherent's fourth quarter fiscal 2025 earnings just out. The quarter wasn't horrible. $5.8 billion in revenues, up, for the year, I should say, up 23% year over year. In the quarter, revenues were up 16% on a year over year basis to nearly $1.6 billion. A record quarter for this company. Very strong growth, profitable growth, operating margins at 6%, hanging in there. So that's good. Better than they have been, certainly better than the losses we saw a couple of years ago. What does this company do? They are some of the world's leading experts on lasers used for all kinds of things, lots of industrial uses, particularly for use in data centers. And we like this so much because the growth in AI data centers isn't just about NVIDIA, it's also about connecting those NVIDIA chips and connecting those machines so they can move information at the speed of light using lasers from companies like Coherent. So it's a very technical business. It's a really interesting business, and it's fast evolving. In this quarter, they shipped their first ever optical circuit switch using non-mechanical liquid crystal technology, which they think is a $2 billion market by 2030. And they say their customers are very engaged in this, and they're going to ramp this thing well into the next year. They launched a 6-inch iridium phosphate production line in Sherman, Texas, a domestic production of these cutting-edge products. Of course, we hear so much from the White House about how that's what they want to see, domestic manufacturing of high tech. These guys are doing it. They think it's going to cut costs, boost capacity, and enhance supply chain resiliency, both for Coherent and for their customers like Apple. Now, when we look at the overall mix of the business, 23% lasers, 62% of this is networking, 15% materials. So when you think about lasers and materials, think about industrial clients that are using lasers and the materials that they are making, the optical materials and so on that they're making, that is not focused on the data center and networking. So there was an industrial laser slowdown, down 2%. Their materials business was down 15%. So the manufacturing sector in the United States is hurting, and we know this. And so these guys who sell into manufacturers in the US are also hurting. Maybe you see the effect of tariffs right there. They wouldn't say it so blatantly, but that sounds like what they're talking about. Nonetheless, the networking segment, the reason I think a lot of people own the stock, certainly the reason I own the stock, did quite well in the quarter. $945 million in revenues in Q4, up 39% on a year-over-year basis. And they're moving up the stack. They're moving from the 100 gigahertz to the 200 and 400 and even the 800 gigahertz of speeds. And they're talking about 1.6 terabyte speeds. That is the cutting, bleeding edge that they say they're starting to see early adoption right there. So the AI data center growth has been really strong for this company, growing it at 39% on a year-over-year basis. Their initial revenue they're already in this quarter from the 1.6 terabyte datacom transceivers. So high performance data center applications, they expect this to ramp throughout the calendar year with a meaningful contribution, they said, in the next calendar year, as well as a deal that was announced at the White House last week with Apple. Well, with Apple's Tim Cook talking about and putting in a press release about coherent US-built VCSELs. VCSELs are, let me see if I can do this, vertical cavity surface emitting lasers. You want to see a VCSEL? Here's where you see a VCSEL. When you turn on your phone, there's my family, and it gives you the FaceTime login, that's using a vertical cavity surface emitting laser. So underneath the little thing in the front of your iPhone, it's shooting a laser into your face to understand what your face looks like, to make sure that it's you. Those VCSELs made in the US, made in a new facility in Sherman, Texas, they're expanding. They think that business is going to ramp meaningfully through the rest of this calendar year and with a meaningful contribution the following year. But most of the revenue impact expected in the second half of calendar year 2026. So how did the stock react when the numbers came out? The market hated these numbers. The stock was down 20% in after-hours trading after rising in the last year, up 70%. So if the market opens up here tomorrow, you'll see, yes, people like me will see a 50% gain or so in 1 year in this stock, but really painful moment for this. So it makes you wonder, is there a slowdown in networking? There were a lot of questions in the conference call about this. You know, the networking has been the rising tide for this business over the course of the last 3 years, such that the other businesses that have been kind of flat, materials and lasers, have, the whole business has really benefited. So has the new CEO, Jim Armstrong. Jim's been there, I think, for almost a year right now, but Jim Anderson, I should say. Jim Anderson talking with the company's based in Pennsylvania. He's down in Silicon Valley, but he's got that great friendly Minnesota accent we love to hear in these calls. And he says, look, quarter to quarter, this can be a difficult business, not least of which because customers are moving from the old products of 400 or 800, moving up to 1.6 terabyte. So those changes with any big customer can make the quarters kind of uneven. And so maybe the guidance wasn't as strong as a lot of people wanted on Wall Street. They're also selling their defense, selling their defense business, which was their space and defense business, which they're saying is going to take $20 million out of the next quarter. That also was another bumpy thing in this guidance. But overall, the networking business, the data center business, he says it's doing quite well.
On a quarter-to-quarter basis, the sequential growth rates can fluctuate quarter to quarter based on lumpiness of demand from our customers or our supply or capacity related things. So, but I think if you look over the full year of fiscal 25, I'm quite pleased with our growth in data center for full year. We saw over 60% growth and even faster growth in the higher speed data rates. And we believe over that fiscal 25, we gained share over that fiscal 25. So we feel good about the fiscal 25 results. And as I said, looking forward into the current fiscal year, again, we see very strong demand ahead of us and a number of different growth vectors, 800 gig, 1.6T. We talked about OCS as well as seeing very strong demand in our DCI segment. So we feel good about the growth ahead of us and certainly making sure that we've got all the capacity in place to meet those demand signals.
So there you have it, Jim Anderson. When he talks about OCS, those are optical circuit switches. And that's essentially scale up. That's the stuff inside the data center that connects the OCS business to make things connect from the bottom of the stack to the top of the stack or vice versa. The other business of scale out, which is hyperscalers who are building big data centers over a large area, that's the DCI, the data center interconnect. So scale up, scale out, they're seeing demand in both those places. They feel good about both those things. I don't feel so good when a stock that I own is down so much, but I don't give investment advice, and this is a good reason why. But what's your big takeaway? What's your drill down earnings number, the drill down earnings bite, I should say, that will tell you a whole lot? Well, Coherent reporting fourth quarter 2025 earnings, fiscal 2025 earnings. Your essential summary says the AI business is cooling off, down 16%. The company says no. The company says demand is strong in AI, but maybe weak in the smaller part of their business that sells to manufacturers, particularly manufacturers in the U.S. Maybe that's the business of affected by tariffs. Now, I own this stock. I'm biased about this stock. This is not investment advice. But look, the data center business is still strong. It's growing at 39% on a year-over-year basis. And the guidance from the company about that particular business seemed kind of bullish to me. Check out our full report on YouTube, see what you think about what they had to say. But I think it's an interesting company here, one of the 50 most important companies in technology, which we will continue to follow. Thanks for checking out Drill Down Earnings. Please follow us, subscribe to us. Follow me on X at Cory TV. Follow us at Drill Down Pod on Instagram, TikTok, and yes, on YouTube.